Hi, this is Dave with Market Trading Concepts. It is Saturday, March the 10th. Doing this video closing out the week of Friday, March the 9th. So first we're going to take a look at the Dow. The Dow Future had an interesting situation where it started to look really bearish. We had this consolidation right in this range here, and we couldn't get through this high print of just over 13,000 in the Dow. And then, you know, we had this kind of chopping around right around support area, and then it kind of had this one day where it blasted right down, right through the key 21 period moving average, and it closed, you know, right at this low right in here. That's not a very good arrow, but it closed right in this low right here, and it closed near the bottom of its range of this, you know, wide range bar. This is actually quite a wide range bar if you compare it, you know, going back to the bars in the immediate future, or the immediate past rather. So the next day, you know, I'm sure a lot of people kind of said, okay, that's it, the market's done. It blew through this support. Well, it didn't blow through it, but I mean, it came down. I think it tested, I was watching it intraday, it came down to about 12,700 in the Dow Future. So we were saying in the last video, 12,800 is support, and we might be interested in being a buyer if we came down there. Watching it intraday, it blew right through there, and I said I didn't really like the price action, so I didn't actually get long this move. So then what happened was we had one bar close. You know, this was a decisive one bar close, but then the very next day we came right up above it. We found support in and around this area, you know, this zone, not an exact level but a zone, and then you can see we pushed all the way back up through the 21 period moving average, and we closed back above it. So this is a really tricky and really resilient market. And you can see here we closed the day with a doji, which is kind of, you know, a little bit of indecision. Now, I haven't used the rollover contract now. We're in the next rollover month here. I think this is the March contract. We're now trading the June contract. So I will focus on that in my next week's video. But just not to lose these support and resistance levels that it saves on my chart, I'm just going to focus on this March contract now. So what you're seeing is a lot of people here were probably looking at, you know, a break of the trend line, because we did have a kind of trend line break, and then, you know, it's not uncommon to come back up here, test it, and then roll back over. So I'm sure a lot of people were thinking of getting short in and around this area, but as you can see, you know, like tops and not so much bottoms. Yeah, I guess it's fair to say tops and bottoms are a little bit they're kind of complex in nature. It's not just like, okay, we hit this level and now we're rolling over. They're a little bit complex in nature. You get tests, retests, tests, retests. So you know, to make a long story short, this is basically like you know, it's not over for this rally. You know, when you see a situation like this, you're still positive on your trend. You're still in a pretty major uptrend. So, you know, a one bar break of key support is not really enough to, you know, for the market to roll over. I think if you're looking at the short side of the market, you would really need to see a situation where, you know, you start getting closes below the 21 period moving average, and your 21 period moving average starts rolling over. So you get a situation like that, you get closes below it. You know, just like in this situation, you had closes above it, a pullback to it, a holding of support, and it moving higher. You need to see the same situation where you get, you know, closing below it, come back up, and then roll over. So you know, we're really a long ways off from that, especially when you look at, like, the trend is still positive, and you know, it would really take a lot to turn this market. So I guess what I'm saying is just be careful on the short side, because this uptrend's not over. We're back above the 21 period moving average. We probably got a lot of shorts interested in this move. They probably, you know, took positions here, and if we get, I think really the level to watch, you can see there was a little bit of testing up here. This bar here is really the level to watch. If you get a close above this bar here, all bets are off on the short side. I think we're going higher. So that's what I'll be looking for going into next week. I'll be looking for a close above this bar here, which happened, this was Friday, Thursday, Wednesday, Tuesday. This big down bar. If you get a close above there, we're going higher. We'll probably push to new highs. If we don't really get a close above there, you're going to have price resistance in and around here again, these highs. But, I think this is the level to watch right here. So now let's take a look at the Dow Future from the Darvis Squeeze perspective. And starting out with the weekly chart, you can see here on the weekly chart, we really only pulled back to the 8-period EMA. So, within the context of this uptrend here on the weekly chart, you had a very clean pullback to the 8-period exponential moving average on the weekly chart. So, that is totally normal, and it just kind of reinforces our opinion that there's no reason to get excited about the short side. You really have no reason. Even on the weekly, you don't even have a red Hakanashi. You do have a loss of momentum in the squeeze. The MACD is still positive. The trend is still very much intact, but you have a 1-bar loss of momentum. So, there's not much indication on the weekly chart to be interested in the short side. On the daily chart, what you had here was this consolidation period, and I think the other week we said, not sure what to do with it at this point, wait for a breakup or a breakdown in the short term, and that's what you had. You had this Darvis box in play here. You had a short signal here. Now, it was against the trend, so this is a counter trend. This is a counter trend move. But you did have, some signs of divergence. You had this rolling over. You're in a squeeze telling you that, heads up, you're going to get some movement. You've got some red Hakanashis, but this only triggered in here on the, this down day. So, would you have caught that? Probably not. But what you had is basically you had this Darvis box in play, and then the width of this Darvis box you sold off to very close to the bottom of. So, projecting this out on a 1-to-1 basis, the width of this box down, you basically almost met that target. So when I see things like this, where the Darvis box that is in play at the time, this Darvis box actually started to form after. So this Darvis box here was in play, this high, this low. So when this actually came down and it almost hit its target, you're usually going to find support or resistance, in this case support, when the price moves the width of the Darvis box that's in play. So that's a key thing that I usually look at, and I say, okay, well, we almost met this target. Are we really going to get more downside from there? Probably not. So what happens is, at least not in the short term, you're at least going to get a bounce, and that's exactly what happened here. So normally what people do is they look for like an 8 and a 21 crossover or something like that. Well, your 8 and 21 period moving average on the daily chart, they did not cross over. So I think the long side is still in play here. And, because we closed back above the 21 period moving average, and because we held this level, what I'm really looking at, like I said, is I'm looking at the top of this candle on the daily chart where the big down day was. And I'm looking to see if we'll close above it for indications that we're going to move higher. If we start having resistance and we start rolling lower and then we break this level here, then I think, okay, this is where you want to start looking at the short side, or let it do this and look for the next retracement to the 21 period moving average. So at this point, we actually even haven't really made a lower low. We really just kind of held these lows in here, these price lows. So we haven't even made a lower low. So, from a technical standpoint, really what you're in is kind of no man's land still. You've got, from a swing trading basis, if you can get above this level again, you've still got resistance here, but you kind of expect a push back above here to new highs. And if you break this low, then you're looking for a push to form a lower low. And then you'd look for, that next swing high somewhere around the 21 period moving average to initiate a, let's just change this to red, to initiate a short position somewhere in here. So, and to initiate a long position somewhere in, above here, let's say. So, I mean, really what you have here is just a big, just a big no man's land zone here where there's really not much to do. These, I think, are the key levels below here and above here, okay? So I know that was a long explanation, but I think this is pretty significant because this action, I mean, we're still, in my opinion, on the weekly chart, we're still favoring the downside. Even if we pulled back all the way to this level here, this uptrend is still intact. So you could still expect a bounce of support here. So I think we're, still favoring the long side. The long side still makes a lot of sense. Be careful on the short side. Take a quick look at the S&P futures. You basically have the same situation. Test of the 8-period moving average, the 8-period exponential on the weekly. You have you didn't really make a higher low either. I mean, you didn't make a lower low. My bad. You didn't make a lower low, and you're above the 21-period moving average again on the daily chart. You're back to a blue Hakanashi here. Momentum starting to move higher on the squeeze. This is this could roll higher, but it hasn't. This is going lower, but it's still positive. So everything is still intact on the S&P future for a move higher. The 60-minute chart is actually still really positive, or it went back to being positive when we had this, this 3-day rally in here after that one sell-off day. So the other interesting thing to note is that at the end of the day on Friday, I think it was officially announced that the Greek bailout plan was a failure and that they were going to default on their debt, if I'm not mistaken. And you can see that news created a quick reaction on an intraday basis, but as you can see, the market still closed positive. So that in itself says a lot. Be careful listening to the news, because the news, you have to watch the price action. That stuff a lot of times is already priced in. Now, taking a look at the NASDAQ, this is really interesting to note, and this is why you want to look at all the, all the sister indexes to make sure that there's no divergences. So you can see the NASDAQ is really strong. You've got a nice uptrend on the weekly chart, right? And then you've got, you didn't even test this 8-period moving average. You've got this. On the weekly basis, it closed more than 50% off the lows. In fact, it closed almost back up to the highs. That is, to me, a sign of accumulation, if I've ever seen one. So you've got some accumulation going on there. Now look at the daily chart. This is really interesting. The daily chart is forming this little, cup pattern where you've got the sell-off and then you've got the build back up to the top of the cup. Now this isn't a cup in the traditional sense. It's too short to be a real cup. But this is a pattern that I really watch, and I've started watching this pattern on an intraday basis. And sometimes how I trade this on an intraday basis is like this. So I've got, let's say you're in an uptrend, right? So your bias is to the upside. You get down bar, right? And then once you get your sell-off done and you get a close above, let's say this bar, this red candle, you get a close above that red candle, that could be a potential entry point, because it shows that you're going to break this low bar, the high of the low bar. And then you also get a situation here where you see you're probing these highs here, right here, and right here. Well, you could look at a possible, you could look at this as okay, here's a swing high, here's a swing low, boom. You're going to make, let me just draw this more cleanly. Swing high, swing low, boom. And you're looking for a situation like that where if you break this swing high, then you could be off to the races. So I think the NASDAQ in terms of price action is kind of leading. If you see this price break above this high from this day, then I think, I think shorts, if there's people on the short side, they're going to get killed. And I think the market's going to be back off and running in the direction that it's been going for a while. And that is to the upside. So I don't want to focus on too many markets today, but I would like to look at the dollar index. Now, this kind of, I'll get into my positions and what happened with some of the positions that I had on a swing basis, but you know, here's another situation where you have to really be careful. If you notice, the same thing happened on the stock index futures, where you had, you know, that you get a 1 bar break of support, but then no follow through, and then it reverses. You know, we reviewed that on the stock indexes, where we had that big bar down, and then it snapped right back up and killed whatever shorts probably got into those positions, thinking that, you know, they were trying to catch that top, or they were thinking the market was going to roll over. So here's, I guess you could call this a mistake in my analysis from the other week. I thought that this was going to come down and test, you know, this trend line, and that we were going to get more weakness in the US dollar. But as you can see here, you had a 1 bar close below the main support level, and then look at this next week, bam, it's right back up, and then bam, it's right back up, and it closed at the high. So this dollar strength has been a bit of a game changer, but it's interesting to note that the US dollar is going up, and usually the stock market goes down, but that's not happening. The stock market is also going up. So there's been a bit of a decoupling in the correlations that are going on. And, you know, correlations, as they say, some of the guys that I follow, you know, they always say correlations work until they don't. And it's true, you know, correlations they work until they don't. So we've got a kind of weird, I don't know if this is the right word, but, you know, we've got a weird kind of market dichotomy going on, where you've got instruments that usually move opposite each other, moving in tandem. And it could just be a situation where there's a lot of money out there, there's a lot of liquidity, and it's just trying to find a place to work. We can't, you know, we're always working with incomplete information. We can't really know exactly why things are happening the way they are, but just be careful here. If you're betting on the short side of the US dollar, I mean, it is holding support and it is showing some signs of strength. On an intraday basis, it's pretty sloppy. You know, you had short signals here, and then it just reversed here, and it closed above the 21 period moving average on the daily, and it came back down and it found support. It's moving higher. So this is really just a caution zone, but it does look like the US dollar is finding support and maybe looking to push higher. So now taking a look at the inverse of the US dollar, the euro, and we'll look at, let's just throw a quick trend line on here. Okay, drop from these highs, and we're in a downtrend, so let's mark this red. Okay, so basically what you're looking at here is from a weekly basis. So from a weekly basis, you know, you've got these kind of swing point highs, and you know, you had 1 bar close above the 21 period moving average. You did have long signals on the daily chart back in here. I think we actually had so we had a long Darvis squeeze on this situation, and then as you can see, you know, I think you hit about half the width of the box. So about half the width of this box here, you hit that target and you found resistance, and then it rolled over. So now you're in a situation where it's kind of a tricky spot, because let me just clear this off. You know, it's kind of tricky because you have this weird situation where you have a bit of a trend line here. I'm just going to draw a really sloppy trend line. So you've got this kind of trend line here. Well, I guess that's a little bit more clear. You've got a break of this trend line, comes back up, it retests it, and now it looks like it's ready to roll back over. So I mean, this is a setup that some people use for a swing trading, you know, entry point, where, you know, you get a break of the trend line, comes down, comes back up, tests it, rolls back over, and then the break of, I mean, in terms of a safer entry, you know, you could try and grab it up here, but in terms of a safer entry, you probably would look at a break of this level. So Because to my thinking, what I'm actually thinking here is, just give me 1 second to clean this up. To my thinking, if we break the bottom of this Darvas box, where you have this situation here, then, you've got this here, test, come back up. If it breaks this Darvas box here, then you're probably going to get some downside, at least to test this low. So the US dollar and the euro are kind of playing a, they're kind of breakdance fighting. If you see the movie Step Up or a movie like that, they're going back and forth, and one guy comes out dancing or one girl comes out dancing and just kills it, and then the other person comes back and just kills it. So they're kind of both dancing around support and resistance levels, and there's no clear winner right now. The US dollar on a weekly basis looks pretty strong. It looks like it's back off to the races, but I think if you get a break of this level here, then you could probably look for a move down to this level. But I would be hesitant to really want to take any bets on this, to put any money to work based on that, or to really speculate where else it might go. If you get a break of this level, then okay, it's pretty obvious where it's going to go. It's going to go lower, but we're at some kind of key juncture points, and it's really hard to say where it's going to go. This looks bearish now. This started to look very positive in terms of a reversal, but now it's starting. But you still got mixed signals here, right? This is green. This is blue. I mean, this is still favoring the short side. This favors the long side. This favors the short side. So, I mean, you've got still a lot of mixed signals, and I think it looks like this wants to break and roll back over, but honestly, anything can happen in this market. Just be careful. So if we take a look at the Australian dollar, I'm out of my Australian dollar position for a loss. I took a stop out on it, and now the reason why I did is because, I mean, we're still in an uptrend here, and we're still holding this 8-period moving average on the weekly. On the daily basis, what ended up happening was I got into the position here, and this is one of the things that really sucks about trading sometimes, but it happens. I got into the position here, and what ended up happening was at some point when we were either up here or up here, I was up about 34% in my position at one point. And in hindsight, it would have been, great. Just take the profit and run. If you get 25%, in your option, you get 30%. Just for the love of goodness, just take that position. Just take that profit. But what ended up happening was I was expecting a much bigger move, and I thought that the resistance overhead here on the weekly chart was not as strong as it was. So my option premium just basically kept eroding, because we got into this messy kind of consolidation period. And then when it broke this level here, and it just plummeted on that one day where Bernanke came out, and gold went down huge, and I'll get into that. Gold went down huge. Everything kind of went down huge, and the US dollar went up. That just totally destroyed my position in terms of coming really close to my stop out point. It almost triggered my stop out point, and then it bounced. It started to bounce back up to test the 21-period moving average here on the daily chart here, and I just cut my position and I just took the loss. It didn't make sense to really hold on to it any longer. What would make more sense is maybe to wait for a little bit more signs of strength, maybe a break of resistance, and reestablish the position. But because I didn't take the profit and because it just chopped around so long, it eroded my premium in the option. And then when this happened here, it was just like, okay, you know what, we're not coming back from that, just cut the position. It sucks, but it happens. So taking a look at the British pound now. Now the British pound has been, interesting because, let's see, where did my trend line go here? Just give me 1 second here. So let's just throw a trend line here. I think I changed some of my charts around. My data vendor changed some of my services, so I think I lost some of the technical analysis stuff that I had, like trend lines and things like that, on some of the symbols I had. I've had to change some of them. So So the British pound is kind of interesting here because now you've got this situation here on the daily chart where you have a short signal here with a potential target of here from a Darvas squeeze perspective. So, you're in a squeeze, so you're going to get some movement. We're expecting to get some, return to volatility, a return to movement. This is favoring the negative side. This hasn't rolled over yet, but it's awfully close. So from this perspective, I think on the weekly basis, it wouldn't be uncommon to come down and do a situation like this and then a situation like that, where it's going to possibly hold this low and put in, you've got a higher low in here from this perspective, if you want to consider this the low. And then, so it wouldn't be unusual to do that. So there is potential for downside down to this target here. I mean, it's quite possible. And I think, just getting back to the U.S. dollar and the Bernanke speech that came out last week, that move there, that action there could have been a short-term game changer. And, because it seemed like when that happened, gold reversed, the other currencies reversed. It was kind of a game changer. And this is another thing that, that you can't always anticipate about trading when you're swing trading, is that you get these sometimes crazy reversal moves that come out of kind of left field, where you're, some of your instruments are lying in the sand, somebody comes out and says something, you don't really know if it's their action that's doing that, if it's the market that's just kind of waiting and would have done that anyways. But, you just get these kind of crazy game changer moves. So you just have to be careful of that and manage your risk when you're swing trading. And that is always, time is risk when you're in the market. There's no question about that. So at this point, I wouldn't want to be long the British pound, but I am expecting, in my opinion, I think we're going to hold support, above this level in the British pound. I don't think we're really going to break down below these levels. So what I'm expecting is, I think we had a kind of a reversal take place here, but we could get a test down here and a move up here. If this happens, then it would be quite possible to hit this target. Am I going to take a position in it? No, not really. I don't think the indications are clear, but I've seen this pattern enough in charts on different time frames that I think it is a possibility. So taking a look at the Canadian dollar, you've got some weird cross currents going on here, because we're just looking at the US dollar, and we're looking at strength in the US dollar, but at the same time here you've got this weekly Darvas squeeze that just fired off right around par on the Canadian dollar, going back here it's saying 2 weeks ago, which looks accurate. It fired back in here, and then you've got a break at par. We're still kind of flirting with that level, but you've got signs of accumulation in here, so it's just kind of chugging away to the upside. It's a little bit sloppy on a daily chart rather, but you've got signs that it wants to move higher. You've got resistance in and around here at $1.0150, $1.01.5. So it's really funny. It's just weird. You've got this kind of uptrend action going here. This looks like it wants to cross back over to the high side in terms of the MACD. You're looking for movement here because we're in a squeeze, and you would expect it to fire off long. So, you're still bullish here. You just had a fresh squeeze here on the weekly. Everything looks good to the high side. But this could be a situation, and this is why I'm very hesitant to take a position, because this could be a situation where you had this the Australian dollar, the same thing. You had a higher low put in, and then you get a long signal, but you've got resistance, and you don't really know how strong that resistance is. So you could get resistance like right in and above here, so you have a little bit of room. You have a little bit of room for movement to the upside, but then you just get this kind of strong resistance, and you don't break through it. And then, if you don't break through it, the market's always looking for liquidity. It's always looking to find areas of liquidity, so it could pop back down into areas where where you find willing buyers. So I think, based on what the chart is telling me, I think it wants to go higher, but I think you've got some resistance in here, so it might make sense to see a clean break of that resistance, a pullback, and then a move higher. But you know, you've got the US dollar higher and the Canadian dollar higher. That's not really normal, so I would be really cautious in taking a position either way. So the Japanese yen now. Japanese yen just looks like death. You know, you had this, you had a short signal back in here, and it retraced, and then it broke it again. This is another way to use this work, is sometimes, you know, you don't go with the first signal. I find like if the market's going to retest, it'll do, you know, it'll do an initial fire of the signal, and then it'll come back, and then you look for the you know, the second break. You know, it's kind of like, you know, when you're testing a support level once, twice, 3 times, boom. You know what I mean? So this is another way that I sometimes use the work when I'm more conservative, when I'm more cautious. I wait for you know, the break, which is a heads up, and then I wait for a pullback and then an additional break. So that's this probably the safer way to use the work. And if it just runs away on you, it just runs away on you. You know, no harm, no foul. So looking at the Japanese yen, it just keeps going lower. You know, where do you get into this? You're getting minor, you know, jumps up. The risk with this is that you're just going to get one of these rapid boom, you know, bars. So if you're caught on the short side, you're going to get your head handed to you on a silver platter. So I think this is really extended. I think there's a possibility of a snapback rally. Everything's, you know, pointing to the downside, you know, across the board on the daily and the weekly charts, weekly, daily. Even the 60-minute, everything looks like, you know, it looks like death in terms of lower. So at this point, I think the safe thing to do would be to wait for one of these huge, you know, wide range bars to the upside to look to take a position maybe at the, we haven't tested the 21 period moving average in a long time. So that might be a good area to get short, either on the daily or the weekly. Will I be taking a position in this? Probably not. So taking a look at gold now. Now, gold has been a bit of a test. So I got long gold when we came out of here. We got this long signal, and based on my experience in the past, you know, when you get a signal like this on the weekly chart, it usually runs away on you. So here was a situation, the difference being that, you know, you had price resistance in the background. In the other positions I took, it was, you know, on a steady march higher with no real price resistance in the background, you know, no congestion areas, no swing highs, lows. So I took a position somewhere around this level, 1766, using some GLD options. This is the actual gold futures, which I like to look at the charts because they chart cleaner. So looking at this, what happened was you had a nice move. So looking at the daily chart, I actually used to time it a bit better. So here's actually where I entered the trade. I'm just going to zoom in a little bit, get a better view of it. Here's where I actually entered the trade. So on the daily chart, I looked at this long signal on the weekly, and then I said, okay, so we had this move up, and then we had this minor pullback day to the 8-period exponential moving average on the daily chart. So, and then you see this this accumulation here, this bar that closed more than 50% off of its lows. So I was looking at this pullback, and then I zoomed in on an intraday basis, and I waited for the 5-minute to kind of turn positive, and then I got it, my call options. So I was long the GLD using call options, right? So then the next morning or the day after, we had a situation where we were up here, and this morning as well. This is the day Bernanke came out, as you can see from this crazy wide range bar. So when we came up here, I was up about 10% in my position, and I was thinking, okay, everything looks good. Everything looks good. We're moving higher. We had the pullback. Now we're coming back up to these highs, and we're probably going to break through and move higher. So then, you know, fast forward, you know, that day, the next morning, I don't remember if it was exactly that day, but I was up 10% right in here. And the next thing you know, Bernanke comes out, and the market plummets. Plummets right to my stop out level. So And in my option trade, I don't have a hard stop. I watch the I watch the level. In this case, I was willing to risk, up to 50% in my option, in the value of my option. And I usually take pretty small. I'm not taking huge positions. I'm not betting the farm. I'm risking anywhere from total position size, maybe on these option plays $1,000 to $3,000. I'm not betting the farm. So here, looking at this, what I'm doing is I'm saying, okay, I'm willing to risk 50% of that total option position with the expectation that I'm going to make 50 to 100% on the option. So I've got at least a 1-to-1 risk to reward ratio usually on these weekly plays. On the daily plays, I might use 25% stop or something like that. It just depends on the situation where support resistance is and if it looks good. So here you get a situation where bang, it sells off $90 to $100 an ounce in no time, closes right at the low. So what I'm expecting at this point is I say, okay, the trade is over. You know what I mean? It's hard to come back from this, but what I'm looking for is I'm looking for at least a bounce, 30, 50% of this bar back up to the 21 exponential moving average, to cut my position so I take a smaller loss. So normally, 8, 9, 10 times out of 10 that will work, because you're not just going to get a rapid move like this. You always get a bounce, or you usually get a bounce, on average. So that's what I was expecting, then I was expecting to take a smaller loss. But then what happened was it just sat there, then it bled even lower. So at that point I said, okay, you know what, this, and you can see it on the weekly chart. I was looking for it to hold that 21 exponential moving average on the weekly. And in fact, it actually did, but it probed so far below it that it was just like, okay, I'm not going to hold this. It just doesn't make sense. So what ended up happening was it comes back up here, and you see now we've had 3 days of strength in gold. But before it did that, you can see, look at how much it came down even from this level, where it came down and then it dribbled and it just bled down. This should actually be red. It just bled down. And, at this point, it's kind of like, okay, what's the point of hanging on to the position? And then, you get this bounce here. This bounce is what I was expecting after this day, where you get boom, 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 get out of your position. There's a possibility it might move higher, but, you can always reestablish the position at some point. So from this perspective on the weekly chart, and it's not uncommon because, you didn't really have a nice higher low put in place before it really moved higher. This looked like a minor, like right in here. You didn't really have a higher low put in place. So you could still have a situation where you get, you've got this long signal, it comes down, it puts in a higher low, and then if it breaks above this level again, it's probably going to be off to the races. But, still trying to determine at this point if the Bernanke speech, when he came out, if the market, if that's been a reversal kind of game changer. So it's going to take, maybe another couple of days or a week to unfold to see, okay, are we going to continue these kind of trends and we're just, in pullback mode, or is it a complete game changer and, the US dollar is just going to take off and these kind of commodities are going to sell off. So at this point in time, it's, I'm totally flat on my swing trades. I was a little bit upset. I didn't freak out, but I was a little bit, I wasn't happy that I turned some winners last week into losers when we got these kind of news-driven markets that kind of became potential game changers. So at this point, I'm sitting on the fence. I'm reevaluating from a swing trading basis. I'm still day trading and not losing money there, but I'm still day trading and looking for decent intraday trends to take positions. It's been a little bit, herky-jerky, sloppy-choppy, but from a swing trading perspective, I'm reevaluating and seeing where the markets are going to kind of settle out and where the trends are going to develop. Are we going to, resume these kind of trends higher, or, are we in game changer mode and need to reevaluate? So that's basically where I'm at. Taking a quick look at silver. Silver held up a little bit better than gold, as you can see here. You had you had, based on this Darvis box, an initial long. You had the pullback. You have signs of accumulation here. Close more than 50% off the lows, and you're still above the 21 period moving average on the weekly chart. and you've still got, you know, long bias across the board on the weekly. So this is interesting, and this, you know, if you can get back above this resistance, I think, you know, you could push higher possibly, and then you've got your next probably level to look at somewhere around $40 an ounce. You know, from the daily perspective, you know, you had the same situation happen where you had these pullbacks and breaks of initial, you know, 21 period moving average support levels, and now you're right back up there. So, you know, you're not really in decision mode here. It's kind of like sit on the fence and wait to see how things unfold. Now taking a look at copper. Copper is, you know, kind of same deal. It's in this consolidation period. You've got, you know, you had a long Darvis squeeze breakout, but it's just, you know, it's holding support. But it's just in this consolidation mode. You'd want to see it clear this resistance around $4. $4-ish on a daily basis. It's just sloppy. I wouldn't do anything with that. But you've got, you know, some mixed signals. You know, you've got mixed signals coming in here. You know, same situation there where it's just in consolidation period and in no decision land. So crude oil now. Crude oil is it's kind of interesting here. Like you've got this situation where you've cleared, let's see, you've cleared this Darvis box and you've come back down now. I think you got as high as about $110 a barrel. Now I'm looking at the weekly chart of the ATCL, which is the crude oil futures, crude oil contract. So now you've got a situation where you've got your 8-period exponential moving average on the weekly at a confluence level, or, you know, these two levels are coming together, you know, the Darvis box, this high, you know, of the Darvis box with this 8-period exponential moving average. You came down, you tested it, and then you can see signs of accumulation where it got bought back up to this level. So on the daily chart, the pullback was a little bit, you know, you had a nice uptrend here, and on the daily chart, you got a pullback here, but you also got a pullback here, like a cleaner pullback to the 21-period exponential moving average on the daily, and you can see it held for an initial bounce. So now you're kind of doji on the day, above the 8-period exponential moving average on the daily. So it's interesting. The question is going to be, okay, are we going to hold this support? You know, you had an initial pullback. You know, pullback, it held, and now the question is, are you going to push higher and break this swing high here? So I think we're probably at least going to test, you know, this level, or test 110 again, it looks like. You know, but, you know, as I say, anything can happen in these markets. You've got some signs of divergences here, where, you know, you could just kind of bounce up. You know, and you could look at this two ways, basically. You could look at this as, okay, we were in a decent minor uptrend. We had the pullback. This is a good entry opportunity, and at least you got a bounce from that. So then you could look at it from that perspective, but you could also look at it from the perspective of, okay, well, we had a top, and then we had another kind of swing, a lower high, right? A lower low, lower high, lower low, and then here's another kind of lower low, you know, a minor lower low. So if we don't break above this level here, then we could just do this, you know. So you've got high, higher high, lower low, lower high, lower low, potential lower high, lower low. So this is where it gets kind of tricky, because you can be on both sides of the market here. What I do in these situations is I look at, you know, what I'm looking at is we're above the 21-period exponential moving average. This is my market bias. This is my line in the sand between long and short. Okay, so if we're above my line in the sand, then I still have a long bias. So this is favoring the long side. This is decreasing, but it's still favoring the long side. Now we're in a weekly squeeze, you know, jumping over here, and we're above support. Okay, we're above dynamic support on the weekly chart as well. So this is positive, positive, positive. So I'm favoring the long side. I'm not expecting, you know, a situation where, you know, that might sell off from there, although anything can happen. But, even if I did, I would wait for it to break the 21 exponential moving average before even considering taking a short in it. So that's kind of how I, filter out if I want to be long or short. If it makes sense to, it made sense to obviously initially look at this as a pullback opportunity, at least for a short-term bounce to half of this range, from here to here. So in other words, here's your pullback opportunity, right? 21 period exponential moving average. Here's your high. Here's your entry point. You can place a stop, below this exponential period, 21 exponential period moving average, and expect at least a 50% move from this low to this high, and then you can see from there. So if you were to get long here, take some profits in here, move your stop up to break even. That's the way that you could manage a trade like that, on a swing basis. But from the perspective of, at this point here, now you're kind of like, you need to get above this level at least. You know what I mean? In order to see signs that you're going to push higher, because now you've got this kind of minor downtrend coming down. And you could also look at this as like a wedge, right? You could say, okay, well now we've got a kind of wedge going, so is it going to break up or is it going to break down? Some people like to look at that. The way I look at it though is like, look, here's my line in the sand. I still have a long bias. And I would expect, if this trend is going to continue, out of this doji day, if this trend is going to continue, you've got a little bit of indecision here. But if it is going to continue, the probability favors the upside. So that's how I'm looking at that. So let's take a quick look at grains. If you can hear some snoring in the background, I apologize. Napoleon's sitting on my chair, my Boston Terrier Napoleon. He's sitting on the chair behind me, and he's sound asleep and probably dreaming about chasing a cat or something. He's snoring pretty loud. So if you can hear that, I apologize. I'm now looking at the DBC ETF, and we've been looking at this for the last couple of weeks, where we had a Darvas squeeze reversal initially, and we had a nice up week here. We had a bit of a doji week here, and then we had a pullback to the 8-period exponential moving average on the weekly chart, and it got bought back up to the highs here. So looking at the daily chart now, you've got a decent little uptrend here with an initial. This must have been a gap down. You can see the gap in here. You had initial pullback here and a nice bounce the next day. And then you had a pullback here below support. So you had a 1-bar close below the 21-period exponential moving average on this day. And then you had a push right back up to the 21-period exponential moving average. And now you're back above the 21-period exponential moving average here, on the close from Friday. So you've got a little bit of mixed action going on. The weekly chart still favors the long side. The weekly chart actually looks really good, and it still favors the long side, I think, above this level in here, where this 21 exponential period moving average is meeting the this downtrend line, the break of this downtrend line. So you've got support in this area here around 20, 28, 27. You've got a potential to push higher here, but you've got some divergences in terms of, you've got red Hakanashis here, you've got a MACD rolling over here, you've got, this is still positive, but it's rolling lower a little bit. So I think what would make sense is to see, this turn back to blue for an initial entry back up. If you want to take a trade on the long side, I think the best entry opportunity would have been in and around this area here for the pullback. You would have had taken a little bit of heat on that. This might have even actually spooked you out when it had the 1-bar close below it, the 21-period exponential moving average. But this would have been the safe entry. This level here would have probably been the safe entry. So in terms of, that's the pullback, that would be the pullback situation, the pullback entry. Now the continuation, looking at it from, okay, let's say I missed the pullback. Now looking for a continuation, you'd probably want to see some blue come in here and a push higher to look for maybe just getting in for a continuation with a stop below this potential swing low. And as long as the risk reward parameters are in place, then that could be a decent trade as well. I actually, I took my eye off the ball again on this one. I didn't get in this level, although I would have been comfortable getting in around this level here. I was looking at it from last week. And after what transpired last week with those big kind of potential reversal moves with the Bernanke speech, I decided just to sit on the fence, not do anything, and just wait and see what happens. So this could have been a potential good entry. I probably wouldn't have taken it anyways, just because of that situation there. And I'm still going to watch this and see, because I like to study the markets for future positions, for future trades, and I like to get my what I call screen time, where you study the markets, what you expect to happen, and then you compare it to what actually happens, and you start to see and develop, experience patterns, which over time translates into what I call trading intuition. So let's take a look at corn. Corn is a little bit, it looks like it's building up. It looks like it's building up energy right around this 21 period moving average to shoot off to the upside. That's kind of what I'm expecting, because I think you had this sloppy long squeeze. You've got this positive. It's very, as we mentioned last week, this is all very early stage stuff. You're looking at weekly charts here, and these can take weeks to unfold. But this to me is very early stage. But I think this is what's going to happen. That's just my opinion. We had an initial long breakout on the daily chart, but as you can see, it's very, very sloppy. Okay, it's very sloppy, and you're getting mixed signals. These look okay, but then they're against that. You're getting mixed signals on the daily chart. So this is very sloppy action. I think we have a potential higher low put in place here. I think we have a potential higher low. So if we hold these levels and we push higher, then I think this is going to happen. So but it's all very early stage. I'm just kind of watching how this unfolds. So taking a look at the soybeans. Soybeans are a little bit clearer in terms of their action. You've got this situation here where you didn't have a squeeze, but everything else looks good. You got a Darvas box breakout on the weekly chart. It's pretty extended. You've got a really nice trend now on the daily chart. You haven't touched this 21 exponential period moving average in a long time. So I think if you were to look at this, let's say, I don't like to swing trade the grains. I think I don't like the risk in holding them overnight, where you get potential limit up, limit moves down against you. You can you can basically bet the farm, sometimes, no pun intended, or actually pun intended. So when I look at this from a chart pattern perspective, I really like this action here where you've got a nice sloping 21 period exponential moving average. Everything's blue here, in terms of the Hakanashi, the squeeze momentum. You had the squeeze fire off here with an initial. See, these are the best kind of Darvas squeeze breakouts where you see that you got a break, minor pullback, and it just keeps running. And it already hit its target. So these are what I'll call the cleanest kind of Darvas squeeze breakouts that you can have. Usually you have a higher low put in place. You get the breakout and it runs. That is a true kind of breakout, Darvas squeeze kind of breakout situation. This is a very clean example of it. So, you've still got everything intact here moving higher. Now but you've hit this target, and I think you're extended. So what I'd be looking at here is from a chart pattern perspective, you see you've got some indecision here, like doji action. I think what you'd be looking for here is a nice pullback here to the 21 period exponential moving average. And I think you could look to see here if it's going to hold support. Maybe it might slip through it a bit depending on what happens there, and a push higher. So I think you're at least going to get a bounce of probably half the range here. If you look at, let's say, even if you're conservative and you say, here's the top of the range, this was kind of a blow off, and you come down here and you hit, you're going to probably get a bounce to at least here in the immediate term. So I think that's a nice potential trade that you could even look, if you like to intraday trade the grains, you could look for that to happen like just a rapid massive pullback in one day. Look at this level, drill down to a lower time frame chart, wait for it to kind of turn a little bit, and then when you get a good entry off of a lower time frame chart, like a 5 minute, a 2 minute, where you get strength coming back in, and you can pick a nice safe swing low that you can place your stop below, then you could look at that as a kind of a trigger entry point. So you look at, this is your main level, then go down to a 2 minute or a 5 minute chart, and then look for that kind of turning point where you can place your stop below a swing low, when the chart, turns back positive, a situation like that. So that is something that you can look at. That is something a tactic that I use for swing trading, but it does work, on an intraday basis as well. They're chart patterns and they repeat on many different time frames. So that's something that you could look at potentially. And just to round it up and wrap it up, let's take a look at wheat. I think wheat is in the same situation that corn is in. If you look at this as a potential, I think we have early stage reversal taking place, but it's still very choppy. You'd want to see a break above this level now. I think you're in a squeeze, so you should get some movement at some point. And I think you had an initial long signal here, but now I think you've got this new Darvas box forming here, which is a little bit tighter. And I think if you get a break above this level, I think you're looking good. So let's just take a look at what that level is. Okay, so I paused the video for a second there. So you've got a level there of around 690 and an eighth, if I'm reading that correctly. It's a little bit small on my screen. So you've got that level of 690 and an eighth, and I think if you're going to start pushing above that, that looks great. From a weekly basis, you'd want to see this start to turn blue. I mean, this is still downtrend. It hasn't actually turned yet, but you've got some bullish indications coming in these two indicators, in the Heikin-Ashi and in the MACD. So from a daily perspective, it looks really sloppy. I mean, what do you do with that? You can't do anything with that. Best thing to do is look at soybeans, I guess, as the leading indicator, and see if corn and wheat are going to basically play catch up. No different than when we were looking at the stock index futures, and you had, the Dow kind of took off, and then you had, later stage, you had the NASDAQ and the S&P futures play catch up, and then they had more room to move. So when the Dow got a little bit sloppy and choppy, then you had, the later stage NASDAQ coming up. I think you'll probably have a situation like that where, the soybean chart looks really good. We'll just flip right back to that for a second. Soybean chart looks really good, let's say, and you can look at that kind of like a leading indicator, right, where you have this really nice uptrend, and then I think at some point corn and wheat are going to come into line with those, unless they're unless there's something really driving the soybean market that is not related to to the corn and the wheat. But I think usually, I think you can look for signs that that's going to happen, and you can get the later stage moves in those two other instruments. So that's all I have for today. Thanks for sticking with me to the end of this video here. We have an exciting event coming up between my meetup group and Jim Ivey's group, the CSTA group in Oakville. So that's the Oakville chapter of the CSTA. I'm just going to find the information there so that you can sign up for it. Okay, so here's our meetup group. It's meetup.com. Let's see here, Burlington Investment Idea Meetup. So if you go to our meetup group here and you come over to upcoming meetups, now you may have to register in order to access that link. That wasn't very good here. Okay, so upcoming meetups. If you click on that link, then what you get here is myself and Jim have co-organized an upcoming CSTA meeting. So Jim is going to be hosting the meeting, and basically we have a professional trader and educator, Rob Hoffman. He is someone who's kind of been like a mentor in a way to me. I've learned a lot from him. I've been following him in his live trading room that he broadcasts on the internet every day, in a live trading room environment. I follow his work. I've learned a lot from him. I've incorporated into the things that I already knew and the things that I was learning at the time, and his service has really helped me in order to kind of more systematize my approach to trading. So when I was in a period of not knowing exactly, I've got all this different knowledge. Let's say I know all these different technical analysis techniques, and I started watching Rob and how he handled his day. Specifically, now he does a lot of day trading, but he really cut his teeth in the 90s trading equities, swing trading. So all of his techniques were born from in my opinion, were born from the swing trading days, his swing trading days in the 90s. And basically what he does now is he day trades using the same techniques, because his techniques kind of transcend time periods. They're chart patterns that are repeatable on 5-minute charts, 30-minute charts, 60-minute charts, daily charts, weekly charts. So it just depends on your time horizon, but the techniques are applicable to day trading, swing trading, position trading. It doesn't really matter, in my opinion. So watching Rob and learning from Rob has helped me to tighten up my own systematic approach and take all the information overload that I had and nail it down into a more systematic approach. Now, I use other techniques other than Rob's, just as an FYI, but I have incorporated what I've learned from him into more of a systematic approach to being able to, analyze, look at the markets, be able to pull the trigger at levels that I know make sense. And, in my opinion, I think that his service helps people that, let's say, don't know where to start and are looking for a kind of total systematic approach to trading, and also to people who have a background and maybe are information overload mode, where they need to say, okay, now what's important? How can I put this all together? How can I be comfortable and have the confidence to kind of start looking at the markets and executing trades and managing, my positions, managing my risk, and having the confidence to move forward and start trading again. Let's say if they're people who have stopped trading, or if they're looking for, a system where, in a community where they can follow it every day, and know okay, is this an active day? Is it a not an active day? Some of the good lessons that I've learned being in Rob's room are when not to trade, keeping my money in my pocket. So we're really excited about this event. I'm particularly excited. I subscribe to Rob's room. I like his work. That's why I continue to subscribe to it. And I thought this would be a great opportunity, and because I thought it'd be a great opportunity because speaking to members of my meetup group here, and I'm also a member of the CSTA. So I go to the Oakville chapter meetings, and I network with Jim and his group, and we share a lot of the same common interests. So we've come together to kind of co-organize this event. Jim will be hosting it, but some of the things that I've learned from both of our members is that some of them just don't know where to get started, and some of them have quite a bit of knowledge, but they don't know how to put it all together into a systematic approach. So I suggested, look, why don't we ask Rob to come in and talk to the groups, because I think it'd be very helpful for the members of both of our respective groups. So we asked Rob. Rob's a great guy. He's agreed to speak to our group. So this is going to take place on the 21st of March, Wednesday, March the 21st, and it's going to take place both at the Sheridan College at the CSTA meeting at 7 o'clock. I believe it's room S301 at the Trafalgar campus in Oakville, Sheridan College. But it's also going to be broadcast online via webinar format for those who are not able to make it. So it's going to be probably an hour and a half event. And Rob is going to kind of go through his approach. Obviously, he can't cover all of his work because he has a lot of work that he's learned over, his 20 plus years of experience in the markets. And Rob, being a professional educator and trader, He is going to cover, how he looks at his day, the kind of things he looks for to set up his day. And he's also going to give you, the attendees, he's going to give them a technique that they can take away and they can kind of incorporate into their toolbox, or be able to, watch it and see how it works for them, be able to implement something right away. So there's going to be a good takeaway from the meeting, and there's going to be some good information, good introduction to what Rob does. So that's Rob Hoffman. He is one of the professional traders and educators with Trade the Markets, tradethemarkets.com. So we're really excited that he's agreed to speak to our groups, and I'm going to link you over to the meetup information. So if you come over here, Burlington Investment Idea, if you're not, there's usually a join me right up here. I'm actually logged in, so I'm already logged in. Just come to the upcoming meetups. All the details for the meetup are there. It'll have the information where you actually need to sign up through the CSTA's website. That information will be there when you log in to to my meetup group there. Or you can go to csta.org. So that's csta.org. And you can look for the upcoming meetings, and you can sign up for those, or you can actually find the Oakville chapter, and you can look for what events the Oakville chapter has coming up. So this is it's a free meeting for those who are either members or first-time attendees. So if you're a first-time attendee, it's free, and there's going to be a lot of great information there. If you're a struggling trader looking, where can I get started, or you're maybe an experienced trader or investor that is kind of looking, how do I put it all together, looking for a systematic approach, I think this will benefit both both of those different levels of traders and investors. So really looking forward to it. Hope you can make it. Hope to see you out there, and I will catch up with you in next week's update. Have a great week.